All right, welcome back, everybody, to the Wise Guys podcast. We're joined again by Jared Hope. We had such a great time with him last time, such great insight, and it was actually based on his suggestion that we do a little three-part series here to really provide some value for anybody listening or watching. And today's focus is really going to be on, what the acquiring process looks like and how it changes from market to market within this country. We've touched a bit about it on the last podcast, and we're also going to get into, what the last 10 months, the effect that this whole COVID craziness has had on the real estate market as a whole, and what to expect in the next 10. And so, Joel, I'll let you take it away.
Hey, Jared, thanks for coming on. Let's talk about how to acquire some real estate. This is interesting, right? I'm a licensed realtor. This is kind of my bread and butter, right? So I'm interested to see kind of what your expectations of a realtor is and your whole process for acquiring stuff. Because I have my own 2 cents on the topic, but I want to hear it from the investor side because I need to do a better job. And I left the last podcast with you, and you know what? That was like it was like a men's club or something, man. I don't know what it was. I felt pretty cool leaving that. I was like, that I felt like a better person leaving that. And there was some awesome insight. So I don't want to set the bar too high for us here, but let's do it again.
No, it's all good. So a couple things. One, dudes need dudes. That's a classic example of why mentor groups really work. So I'm actually in the process of creating a men's group. It's called Badass Brotherhood of the Amazing Dude. and here's a shameless plug for my program. And so I'll start with a plug, which is kind of funny. So the Brotherhood of the Amazing Dude, what I've come to realize is men need men. And, it's not just the feeling they get and the confidence they get, but it's the ability to bounce ideas and just chat strategy and all that stuff, whereas when you're out for beers with your buddies, what they tend to do is they just take your side and, they'll convince you that it's the right move, or they'll, after you have a couple drinks, they'll take your side on, why you and your wife aren't getting along, or you and your girlfriend aren't getting along, and they'll always take your side, which is fine. That's all cool. That's what bros do. But the Brotherhood of the Amazing Dude, it's going to be like this program where, there's going to be high levels of integrity, high accountability. It's going to be lots of structure. It's not just going to be real estate specific. It's going to be business specific, and it's just going to be rad. The other thing you mentioned was what are my expectations on an agent? Before I start with that, what are your expectations as being an agent? Let's start with that. Like you said, you had your 2 cents. Let's start with your 2 cents.
Well, I love working hard, but I only like working hard when I know I'm getting paid.
Yeah.
And so what really chaps my ass is when the people are expecting people to do things for free.
Yeah.
And the public doesn't understand our industry, and that's not their fault. It's our job as the real estate industry to say, hey, this is the process, and here's how we're going to create the most value for you. And you got to lay it out, set the expectations. It's like any job, right?
Yeah.
But for me, the more I get into this life of mine, I just want to be dealing with people I like. At the beginning of my career, and I can tell lots of stories, but there's a lot of people out there that don't give a shit about me, and all they care about is their business. And you can cut through that crap easy when I've been doing this a dozen years. When there's a young guy getting into the business, it's someone says jump, it's easy to say how high. And so where do you set boundaries? How do you do that? My whole thing is, what do I expect from clients? Yeah, just mutual respect and I just want to be dealing with good people, period.
Yeah, I like first of all, I don't use just one agent. I have multiple agents. Like even back in the day, even back in 2005, I bought 64 properties in 2005. And going into 2005, like I bet you I had 3 or 4 agents. I didn't sign buyer brokers agreements. I didn't sign any of that stuff because, here's my views of agents, and most agents don't like that because they want to get paid. But I'm totally clear up front with all my agents when I go to work with them. It's like, hey, if this agent's at Remax, for example, certain agents at Remax, that agent will be able to pull me deals out of that Remax office that I just won't see until they hit the MLS listing if I was using a C21 agent. So, so I have my agents where, I'll buy 80% of my deals from, or my agent that I'll buy 80% of my deals. But I also have other agents that will bring me deals that they might just run into. Hey, I had this listing meeting, they're thinking about listing it. This is a perfect property, but I've already established myself as a buyer or a player in this game that when an agent brings me a deal, it's, they know I'm going to take a serious run at it. But back in the day, I was using agents that didn't understand the rental market, and what I've come to realize is every agent thinks they know how to sell an investment property, but the truth is most don't. They know how to sell a house, but they don't know if it's a good area. They don't know the market rents. They don't know how to determine, the future value of the house for, if you were to repurpose it into a legally suited house, for example. So selling a home and selling a small business, which is a rental property, are 2 totally different things. And, it's like little tricks of the trade. Like, I want an agent, if they understand the rental business and they own rental properties themselves, they'll understand that when you put an offer on a property, you want to be able to show the property before possession. They'll understand that you'll want to be able to market the property before possession. They'll want to be able to put a for rent sign on the property before possession. Whereas most agents will just go in and say, let's write the offer and here's your subject twos. Like it's really generic cookie cut template for buying a home. So my expectations of an agent are, I only use agents that know how to play the game. I only know agents who are playing the game, and I'll only use agents that are willing to work for me. And what I mean by that, it's like, if we go to put an offer on a house, I want them to do some homework before I go look at the house. And now it's a little bit different for me than a guy starting up, for sure, because a guy starting up, they have no street cred, they have no track record, they have no experience. So it's kind of hard to go up to an agent and say, here's what I want, in hopes that they're going to get paid. So whereas when I walk into an agent now, it's like, if you find a house, here's my expectations. My expectations are you call the agent, you ask, you probe as much as you can. Here's a list of questions that I want you to ask. If it meets the criteria, you go look at the house. Once you look at the house, then you call me. And if you call me at that point, there's like a 90% chance I'm buying that house or putting an offer on the house. Going back to 2005, that was a little bit harder or in 2003, when I was just starting out, we didn't really have any, it was really hard to go up to an agent and say, here's what I want you to do. And then I'll pay you once you do that, because every agent is like, no, like, fuck, like, I just want to I want to make sure I get a paycheck. And the good agents, I feel, will build the relationship with me that will guarantee their business.
Absolutely.
Or guarantee they get paid at some point in time. It might not be on this deal, it might be in a year, but if they do the work for me, it's all about relationship. People do business with people they trust the most. That's how it works. So, but there are times where, you and I, Joel, might do a deal or start down the process of doing a deal, and then another deal shows up that, for sale by owner, or another agent brings me one or whatever, where what I have found in the past, it's like, so say Jordan brings me a deal over here, but for the last 3 months, I've been working with you as to find properties and so on and so on. But then Jordan shows up with a deal. It's a simple conversation saying, hey, Joel, listen, I'm still in. I got to delay things for the next 3 months because a deal popped up over here. It's just about communication.
Yeah.
And if you really want me to win, and Jordan wants me to win, and everyone wants me to win, and I want them to win, it's mutual. Everyone will win. You know, it's because I've used the same agents for the last, man, I have one agent I've used since 2003. So, 19 years, 18 years I've used this guy. And I have another agent I've used for 10 years. I have another agent I've used for 12 years. It's just all about being clear and respectful with their time, because everyone wants to get paid. Everyone wants to get paid.
Like on both sides of the equation, whether it's you, Joel, or you, Jared, you probably over time you develop a sixth sense, right? If you're dealing with someone and you can tell, oh, look, they're in it for themselves, because like you said, there's nothing feels as good as what you just described, right? Everybody's winning, everybody's mutually working together, and in the end, we can keep doing it because it works so well. But like Joel mentioned, there's people, that have their own self in mind more than the other, and I guess you probably deal with it on the other side of it as well too, Jared.
Yeah,
it's like anything, like you just have to expect that. And I'll go into what clients, what you can have clients be doing, or what clients could be doing, or what your listeners could be doing. But it's like, there's people like that all over. It's what makes the world turn, man.
Yep.
And it's like going outside and it's raining outside, but you go outside anyways and you get wet. You can't get mad that you got wet and you saw it rain. It's raining. You didn't put on a fucking raincoat.
Good analogy.
It's just the way it is. And you have to, you have to insulate your business. You have to insulate your systems and structure that those situations are less and less. And if they happen, it's just like, shit happens. Like, people are going to do what they do and you can't control people.
Yeah.
However, what I would recommend new investors do, which is what I used to do all the time, is get educated. And how you get educated is, there are ways to see properties without seeing properties, without walking in them. For example, right now, almost every house listed should have a video attached to it. Like, you can go on Google or on YouTube, type in the address, and more than likely a video of something's going to show up of this house. More than likely, that's most agents are doing that now. So, you could go ask an agent to set you up on a search, 2 searches. One is for all new listings that hit the market, and a search for, or a report, of all solds on the market. So now you're looking at 2 things. Just by looking at those 2 numbers, you can start seeing what a sale price is going to be on a particular house. You can start creating your own comps for that particular house. That doesn't waste an agent's time. I'm not an agent, but I don't think I would be happy if I had 100 people calling me saying, hey, can you tell me this price? What do you think about this? What's this going to sell for? What's this rent going to be? Like, I would lose my shit. And I'm a pretty calm guy for the most part. I would lose my shit if multiple people were doing that to me. So I think as a starting investor, I think it's really easy to call up an agent, because an agent would do it all day long. Set me up on a search. Okay. Send me a list of all the solds in the last 60 days in this area. Okay. Like, really simple. And an agent's going to do that because it's really simple to do. It's not going to take up a lot of their time. And then the agent thinks that they're in their system, but it's just a search. But from there, then that new investor can start researching like padmapper.com and rentfaster and rentboard and gottarent.com and all these other sites, whatever sites are in their area, to determine what the rents are for that house, to determine what the sale price is going to be for that house, to determine the expected days on market for that house. Like, it's really not all that hard to start the journey. So what happens with the new investor, if they spent the first 30 to 9, this is what I do in my coaching program with my clients, is they'll spend 3 months, 1 to 3 months researching a market, researching an area. And then once they decide, okay, I like this area, then they'll go start shopping at the Safeways or the Save-Ons or the coffee shops or the Home Depots, co-ops, whatever it is. They'll start shopping in those certain communities, walking the streets at night, walking the streets during the day, checking out the schools, not in a big black van, but just as a cool, don't want to be creepy, right? But start checking out the schools and all that stuff, because now what they're doing is they're doing their homework and due diligence. And the reason why I say all this is really important is because the number one thing I learned a long time ago is not to trust an agent. No offense to all the agents watching, but agents want to get paid, pure and simple. And Joel said it. And nothing wrong against anybody. That's why we all go to work, is to make a paycheck. So I get it. But if at the end of the day, once I buy that house, I can never go back to the realtor and say, hey, Joel, like, you sold me a piece of shit. Like, that's not going to happen. He's not going to say, oh, sorry, I'll buy that house back from you. So there is a form of buyer beware, because agents are doing their job. They're brokering a deal for you. It's my job to do the research on the product. It's my job to do a research on the area. It's my job to understand who's going to live in that house. It's not the realtor's job. It's mine.
So this is cool. So you want, it's like anything, right? If the Calgary Flames are struggling, the Oilers are struggling, they're doing a little better than us, but the team aspect has got to be dialed in. And it's like, and so for me, you say it's your job. Yeah, it is your job. You're managing your business. So you're going to manage the realtor, the property manager. You're the manager of the managers for whatever. And so on the agency side, for me, it's all about, okay, client comes in. What are they looking for? Okay, it's an investor client. How do you provide value for the lifetime of that potential relationship, right? And so
I'll answer that for you right now. If I was a realtor and you came up to me, I get it all the time, guys. I get people all the time saying, yeah, hey, I'm building a power team. I hear this saying all the time. There's a group or groups that talk about building your power team. And I'm like, yeah, okay, power team. Like, how many properties do you own? None. I don't own any. Well, it's not a power team yet. Like, a power team is one that takes action. And so people come up to me and say, yeah, I got this property and I need some feedback. Like, what do you think about the rents? And I'll be like, okay, well, what stage are you at in the buying process? Well, I'm thinking about putting an offer. Well, great. I would slow down. So here's the advice I give every person who calls me up looking to build a power team. They want me on the power team. My first response is, no, I don't want to be on your power team. Thanks for thinking about me. Here's what I need you to do to be on my team. I am the power forward in this business. Like, I have to be in the top 5% for residential real estate owners in Canada. And what I tell people is, listen, you want me on your team? Great, I'm in, but I need you to do some homework for me. Go research the market. I don't want you calling me every single time you find a house on MLS. Like, it's gonna blow my brain up, and I don't have time for that. Like, if you want to do business properly, I need you to manage our relationship, because me as an investor, I can't manage you, Joel, as my realtor. I can't manage Tilt as my property management company. I can't manage Joel as my renovator. It's not about managing the manager. And all these groups say, well, you got to manage the manager. That's such bullshit. You got to manage the relationships with the managers, because it's my systems. It's your systems. It's your systems. I don't understand like that. I can't micromanage your systems. It's impossible, but I can manage the relationship with you. If I want to get what I want, I have to manage the relationship with you so I can achieve that outcome. So back to when someone calls me, what I want out of that relationship is their business. So I have to manage that properly. So it'd be like if someone called me and said, hey, blah, 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 I'm looking to do this. I'd be like, great, here's what I need you to do. You want to get the best out of this. You want to move the fastest. You want to become the best. You want to have the fastest outcome, whatever it is, whatever the saying is. I need you to spend some time researching. I want you to slow down before you speed up. I get you can go out and buy some real estate tomorrow. That's awesome. And I get there's other agents that will sell you stuff, and there's other management companies that will do this. But what I need you to do is slow down. Like, I'm going to put you on my mailing list. I'm going to get you some information. I'm going to send you some sold so you can start analyzing the comparables, because I don't want to sell you. I don't want you to go off and buy a piece of shit. So just by guiding them that way, you're actually building their level of trust, or you're going to push them out of your system, which is actually good too, because they're not going to eat your time. They're not going to mind fuck you. They're not going to drain you. They're not going to be an energy leak. They're not going to call you up and then go buy over here. So it's a way, what I find is it's a way for me to manage the relationship, help them get supported, also wean out the people that are just tire kickers, because those tire kickers leave right away. And then what happens is when those people come back into my system, they're ready to go. They're ready to move. They've done the homework. They've done the research. And I just had to send them a quick email with like 4 or 5 things to do, kind of thing.
Yep.
So once again, it's all about, to me, it's all about managing the expectation of that call. And sometimes the average investor, the new investor, or even a senior investor, they don't understand what to do next.
Yep. You guys are laying some good fundamentals in terms of how you approach, how you act in this market. I'm curious, maybe you guys can both answer this. Maybe start with you, Jared. How has any of that changed, if it has, during this whole COVID business? Has your approach changed at all? What have you noticed? We're living in a weird time. It's basically a year now that we've been in lockdown measures, and I know there was a lot of panic at the start of last spring. This time last year, things start to level out, and then things start to heat up here in the Okanagan. Has anything changed for you? What have you noticed that you've had to kind of adjust as you go?
Well, like obviously multiple, first of all, building the relationships never changed. That's been pretty consistent for decades and decades and decades and centuries, like forever. Like that's just common business quality, I think. As far as the market, like the market is picking up. Like we're starting to see it pick up significantly all over. I see in the Lower Mainland, I see in the Okanagan, I see in Toronto and the GTA, like prices are going through the roof. Like prices here in Kelowna, it's just crazy. Things are selling for 80,000 over list, 120,000 over list, 200,000 over list. Like it's insane. Unconditional offers, insane. Do you know that for all my buy and holds that I've ever done, and I've probably transacted close to 250, 300 buy and holds. I think I have maybe done one unconditional offer on a buy and hold. And I just don't do that on buy and holds. I do not go unconditional. I go subject to financing, subject to inspection. I might tighten them up, bigger deposit, higher amount for a offering for sure. But I've always been subject to. And my view of real estate is that they're like buses. If I didn't get that deal, there'll be another one. Another bus comes. If I miss that bus, another bus is coming. Buses come every 15 minutes and, or every 8 minutes, depending on where you live.
Yep.
And real estate isn't much different. What I find clients do, and sometimes it's pushed by the agent as well, but what clients do is they feel like they're missing out if they don't buy that house. So they'll overbid on a house. If it's your primary residence, fine, like pay whatever you want. It's all relative. You're going to buy high, sell low, sell high. It's all relative. It doesn't really matter. When it's a rental property, it's a little bit different, and in my opinion. So right now in this market, like interest rates are driving the economy in all these areas. Like right now, I think the 5-year fixed. I just did a 5-year fixed the other day for 1.72%, and put that in perspective. In 2003, my first mortgage was 7.1%, 6.9 or 7.1% in 2003. So these are the lowest interest rates we've ever seen. If you look at the fundamentals of the economy, unemployment if nationwide is 10%. Wages are lower today than they ever have been in the last 10 years. Cost of living in the Vancouver area in BC is like 93 cents out of every dollar is going to cost of living. In Alberta, 46 or 52 cents or something like that of the dollar is going to cost of living. So the market's on fire all over the country, but there's certain areas of the country that are better than others to invest. So now people have to decide, am I investing for cash flow and am I investing for appreciation? Those are the two real ways. And I think the people who are investing for appreciation could be in some trouble in 5 years if they ever need to sell. If you don't ever need to sell, then you just ride it out. Yeah, kind of a long-winded answer, I know, and I didn't answer the question, what am I doing in a hot market? Because I'll get to that. But I just see the market on fire all over the place, and these interest rates are driving it. I think the interest rates are going to drive the market for the next 3 to 4 years. And then from there, it's really, who knows? You got to be very careful investing right now.
Yeah, the interest rates are interesting because historically the variables kick the fixed interest rates ass. Probably for maybe since in the last 30 years, I'm going on a limb here. I'm saying the fixed rate was better maybe 1 year.
Yeah.
And so, yeah, 1.85 on a 5-year fixed. Like Arlen Dolan did a cool podcast with Julie Hoffman, and he was saying, "Holy smokes, I made all this money just because I was variable for this amount of time or whatever." That was the gist of it, and in comparison to being in a fixed. But if one thing from this COVID has taught me is that this world we live in is very unpredictable, and the amount of things we can control is a lot less than most people probably think. And so I'd be going for a fix. Maybe I'm a little more conservative, but coming out of this, like, things could get pretty hairy here. 10% unemployment, rampant inflation, a government that has it's just an unlimited credit card. So I think Warren Buffett says, be greedy when others are fearful and fearful when others are greedy.
Yeah.
That might be my projection here, is if I can, I'm taking advantage. I did a refi on our house, blend and extend, lower the payments, put some, I want to be in a cash position because I'm not seeing a ton of deals in the Okanagan.
Yeah.
Maybe I need to be looking somewhere else, but the COVID thing is very interesting in that control what you can and don't get ahead of yourself. I love your advice of slow down and the whole bus analogy. Like when I first started out, someone is like, okay, I finally got some money. I got a JV partner. Let's go in, and they want to feel the rush of the deal. If the market is good, you can do everything wrong and you're going to make a buck. If the market is bad, you can do a lot of things right. And if you can't hold on, you're pooched. And so let's talk about when you write an offer, you're subject to inspection, subject to financing, but that protects the investor. That's the proper way to do it. Now, I got a killer spreadsheet. My buddy Jerry, I think we probably even talked about this last time we were on a call, but he had a friend who was a chartered accountant, and a very simple spreadsheet, and income, all your expenses, you lay them all out, and it just says okay or wrong. And so if it's making, if it's positive cash flow, it'd say okay. If it was negative cash flow, it'd say wrong. I know you are more equipped than I am for that. Like, my main business is selling property. Your main business is buying and holding on to property. So walk us through your due diligence. How do you look at it? How do you analyze it? When do you walk away? When do you say, it's go time?
Yeah.
Sorry to interrupt, but
Yeah.
And can you give us also, while you answer that question, a little bit of a lens in the current situation as well? And, given where this market potentially is heading as well, maybe spice that in there too.
Well, I'll start with like the interest rate. Like, the interest rate's interesting. Like, I've had so many properties on variable forever. And, like right now you can get prime minus 0.8. So prime sitting at 2.45 or 2.4, whatever it is today on March 8th. And, so you're 1.6 kind of thing for a 1.55, 1.6 for a prime minus. And, for the first time ever, really, like you said, Joel, maybe once in the last 30 years, and, it's true, where I sit and look at mortgage rates. If mortgage rates go up 0.5%, that variable is now more money than my 5-year fixed. And, right now the Bank of Canada is sitting there saying that, due to COVID, due to all this other stuff, due to the state of the economy, variable rates, prime lending rates going to be low for the next couple of years. Okay. They didn't say for the next 10 years, they just said for the next couple of years. So with $1 trillion or $2 trillion or $3 trillion in deficit, and the feds are just pumping money like they're devaluing all the money, currency, by printing more and more money, there's a massive problem coming. And, like, I don't think interest rates will go to 6 or 7%, because if they did in the next 5 to 10 years, that's going to put us into a depression. But I think interest rates will go to 3 or 4% over the next 5 years, 6 years. It's inevitable. It has to. We're going to see income taxes go up. We're going to see property taxes go up. We're going to see taxes on gas go up, and milk go up, and food go up. They have to. The government has to make money. So fixed term rates are by far right now, you can't beat them. I've even locked some of my good properties, my fourplexes, my bigger cash flowing properties, into 10-year terms, because, in the next 10 years, rates will go to 2, 3, or 3, 4, 5, 6%. And I'm locked in at like 2.2 for a 10-year term. Like, that's insane. That is completely insane. So, people have to understand the way to play the game. It's just not, what I find most investors do is they just go off and buy a house today, and they only think about today. They don't think about tomorrow. So.
Sorry, man. I don't mean to be pessimistic, but you say, well, they don't want to see a depression, and I've lost all confidence in what our government will or will not do to us.
If we were a year ago, Joel, if we were all on this call saying, we were all saying, there's no way the government's going to lock us down. There's no way they're going to do this. And look, a year later, we've been locked down for a year.
Yeah. So
everything's off the table.
Yeah, it's all off the table. So it's fixed rate makes a lot of sense. Now is as important as it ever has been to really look at your real estate carefully, because it's not going to go on like this forever, everybody. Holy shit, it's going to turn hard at some point.
But this is all man, I don't want to plug I'll plug every coaching program. This is why it's so bloody important to have a coach or some kind of mentor who's played the game. Not just one that started 4 years ago or 5 years ago, has ridden this wave and has nothing. Because, in a hot market, you can, like you said, Joel, you can buy the biggest piece of shit in a hot market and look like a genius. It's when the market turns that it's like, am I as smart as I thought? When the market turns, right? So, I look at, the other day I was driving with Krista. We have a mortgage payment of $6,700 on a $1.82 million mortgage. And we're at 1.62%. We just locked in November. And I was driving with Krista the other day, and I'm like, I think we should start adding like $2,000 a month to our payment. And she's like, why would we do that? I said, pretty simple, because in 5 years, we're going to have a problem, because our payment, so we have a 30-year AM, in 5 years, there'll be 25 years remaining. And say interest rates go to 5% from 1.62%. My payment's going to go from $6,700 to $10,000. Now, we can afford that, but there's a lot of people that can't. So I told Chris, I said, if we want our payments to stay consistent throughout the whole course of, this mortgage, we need to buy down the debt to offset the higher interest payment that's going to be there in 5 years. So it's all about, what I've come to realize is real estate's like a game of chess. Every move has a reactive move. It has a consequence to it. And, so that's how chess works. So same thing with real estate. When you do something, there's a consequence to it. It might not show up for 5 years. It might show up in 2 years or 8 years, but something's coming. You have to understand how to play the game. And, so a couple things, just to answer your original question is, how do I filter out a property? Really simple. Back in the day, it used to be 10%. So if I went and found a house, and that's when interest rates were like 6, 7%. If I found a house and it was, $300,000 or $500,000 or whatever it was, I would have to be able to get 10% of rent. If I couldn't get 10% of rent for the year, I wouldn't buy the house. So, and that was, let me say it again. I wouldn't even look at the house if I couldn't get 10%. But that's, that takes some research on my end to understand, what houses are renting for. What is a single family house, 3-4 bedrooms, double detached or attached garage in this type of it? What does it rent for? Well, that's going to rent for, $2,000 to $2,500 all day long. Okay, great. Boom. That's my numbers. So that works out to be $30,000 a year. So that at 10% allows me to look at a $300,000 property. as interest rates, so what I would do is I would say, okay, 10%, it's now like 7% with today's interest rates. So what that does is actually, it just cleans up my filter, and then it pops a house into the next chamber or to the next bucket, where it's like, okay, I think I can get 7% for this house, or back in the day, 10%. Now I'm going to go to the next step, which is I'm going to start confirming all my numbers. And then once I confirm all my numbers, it's like, yeah, okay, I'm pretty certain I can go get that. Then I go inspect the house. Once I inspect the house, then I'm looking for long-term maintenance. I'm looking for furnaces, roofs, windows, what kind of shape are they in? Because if at 7%, that's assuming, I'm going to factor in 10% property management. I'm going to factor in, 6 to 8% for repairs and maintenance. I'm going to factor in 2 to 3% for vacancy, depending on the market, utilities, depending on the type of house. So, but once I go look at the house, I start looking for, the bigger ticket items. If I walk into a house and, it needs a new door, I don't care about that. That's like $80. But if I have to replace that furnace in the next 5 years or next 8 years, that's $7,000. That could be 5 years of profit if I have to, depending on the type of house. But if you're buying a house for zero cash flow or $50 or $100 a month cash flow, there goes 5 years of profit just by replacing a furnace. So my quick rule of thumb is, when I look at a house, 7%. If I can get 7%, it goes to the next level, the next bucket, where I'm actually filtering through the property to see if it's a fit for me.
Cool. So quick, at first glance, the 10% rule. Keep it simple.
But what?
7 to 10%.
Yeah, I would go 7 to 10%.
7 to 10.
7 to 10, because right now with interest rates, you can dip as low as 7. As interest rates come up, I would want to be able to get more rent for it.
You really had me thinking after that last call, right, about strategy, because I'm invested in the Okanagan. I live here, I work here. I know a good deal when I see one, because it's what I do for right now. And then you had me going, oh, shit, like maybe I need to be looking out of province or on cash flow in Edmonton. And so, then I started going to obtain this kind of cash flow in the Okanagan. My strategy's got to be completely different. I can't do your strategy here. There's no way I can make residential real estate work for me. Right. And so I started to and since our last call, I've been looking way harder at commercial property. So stuff downtown where there's leases that would have a solid tenant, or some maybe with a covenant. Or so when we started talking about doing this podcast, I know we said, okay, let's talk about some different markets and different strategies that may work. And so I'm doing a caveat here. If someone wants to invest with me and calls me and say, hey, I want to put some money in the Okanagan. Right now, you could probably get in, like I can't see the market turning here for this year unless something drastic happens. But if someone asked me what was going to happen in March, I would, I don't know anything I think I do, but no one knew where we would be today a year ago. And so it would be foolish for me to think I know where we're going to be in a year. But if you look at the inventory and the absorption, what's happening in the Okanagan, there's nothing here. And so it's drove the prices through the roof. And I'm kind of going off on a tangent here, but the strategy, tell me, guys, what is your take on strategies right now? If someone's going to go in and they're going to be put money in and they want to, it's a 10-year play, what are you going to do, Jared? What are you going to do?
Man, I live in Kelowna. Like I live in Kelowna, and I often tell my clients, like, if I'm not doing it, you shouldn't do it. Because if I can't make it work, odds are you probably can't make it work. Like I've looked at Ontario, I've looked at BC, I've looked at Big White, Kelowna, Lower Mainland. Like I've looked all over to invest. And I look at it like this. It's like buying a stock. I don't own these stocks, but if I did own a stock, I wouldn't need to see the store. I wouldn't need to see the brick and mortar. I just need to know how much am I paying for it, what return am I getting it for, What's the future of it? When can I sell it? And I look at real estate right now with what's going on, and I just can't make anything work in the Okanagan. You said it. If my number one plan is cash flow, which is what my plan is, I'm not buying in the Okanagan. I'm going to buy in Alberta. You start looking, because that's where the market is the lowest right now, and it's starting to turn. Look at oil. Oil today is 66.39. Nobody's talking about oil. Nobody's talking about oil. You watch the news, nobody's talking about oil. No one's talking about supply and demand. No one's talking about how demand's going up and oil prices are starting to creep up. Every article you read about oil, every article you read, like every article, it's not some, it's every article. They're saying we're going to see $80 to $120 oil in the next 12 to 18 months. So if that's the case, like that's your next boom. You look at the 1.6, 1.8% fixed term interest rates. You look at the 2.4% variables. You look at all the GDP. You look at the future. You look at the Trans Mountain, Line 3, Line 5. Those are all going to be done in the next 12 to 18 months coming out of Alberta. There is a time and place to be investing. So I have a client out of Ontario. We're talking about strategies. So I have a client out of Ontario where he has 7 properties in Ontario. He has probably over $1 million, 1.5 of equity in these houses now because the market's gone up. He's losing $1,700 a month. And he'll sit there and say, they sat there and said, yeah, this is great. I'm like, yeah, but you're like, it's $1,700 out of your pocket. The whole point of owning real estate is to live a great life, not to feed it more and more and more to hopefully one day sell it. And then if you go to sell it and the market's in a downturn, you can't sell it and it just delays it. So what we're doing there is we're taking a couple of his properties, selling them, redeploying that money into Alberta, where now now it's a balancing act. So he can go get the strong cash flow, and then he's going to go invest in the GTA, which is all appreciation with negative cash flow. Same thing in Kelowna or the Okanagan or in Vancouver, the same principles could apply. So now these properties in Alberta, they might see only 2 to 3 or 3 to 5% appreciation year over year, unlike Ontario or Vancouver, Kelowna, that's seeing 10 to 12. So you're going to forfeit some appreciation for sure, but you're going to gain all this cash flow, which offsets the negative cash flow over here where the appreciation is. So now it's kind of like the best of both worlds.
Yeah.
Where that's a strategy. It's like, hey, I want both. Great. Well, here's how you do both. Versus just running off and buying all these properties in the Okanagan or buying all these properties in the GTA or in the Lower Mainland, where it's your only hope is a Hail Mary, which is appreciation.
Yeah. Like the Okanagan, if you want to invest in residential or multifamily rental property, it's impossible.
Yeah.
There's apartment buildings coming on in Kelowna. Like I have a search. I see every single apartment building that pops up, every single commercial property that pops up. So here's my take. If someone wants to put their money here, we grew up in Calgary, and we were by Brentwood Mall, which is one of the shittiest malls in town. But there was a Safeway and a London Drugs and whatever. And we'd go on Friday nights and we'd walk to Blockbuster, and we'd get some nibs and we'd pick out some movies. And anyways, that's gone. And there are now 3 40-story buildings there. And so there's commercial
right by the university.
Right by the university. And so someone got paid big time by holding that Blockbuster in that building, and the land there was crazy. So a different spin on this is in Vernon, where I live, there used to be an old Liquidation World building downtown. So 5 years ago, I was trying to sell it. There, on the other side of it, there's this Legion building, which finally got ripped down. And so someone could have had a whole block downtown Vernon. And so I couldn't sell that thing for $1 million. I tried, and this guy tried to make it work this way. There's too much debt on that one. It just didn't work. At Kelowna, there was a site, the Liquidation World, at pretty much the same size, right? Same building here. Put that building over there. It's going to be about the same size, give or take. That site sold for $8 million. And so Thomas Byer really got me thinking. He says, okay, well, you see all these high rises going up in Kelowna. And now if you look in Penticton, there's 12 stories here, 14 stories there. So if you look at downtown Vernon, where in the last 5 years, oh, they got the cutesy new lights everywhere, the nice little bricks on the sidewalk. It's a bit transient, or maybe quite a bit transient at times. But if someone can make properties work downtown Vernon commercially, if you can find strong tenants, like I think they're undervalued because retail is getting slammed. So how do you find something where you have some good tenancy? So now it's a different type of real estate. So this isn't a new investor deal. Like, it's easy for someone who's just starting out. It's a lot easier to get into the residential real estate up down cash flow game. But if someone wants to make money in the Okanagan, there's deals to be had in the commercial space, but it's a completely different strategy. So
I get it, totally get it. I think commercial is very scary, and I own commercial, and in that's one of those things where the market's hot, you look like a genius. When the market's not, you could have your foot right up your ass.
Yeah.
And like, people need to understand is, I don't do commercial. I Thomas Byer is a crazy smart guy, crazy smart. And this is just a classic example of two different views, two different ways of doing it. Neither one's right. Okay. Thomas isn't right and I'm not right. We just have two different ways of doing it. My view of commercial is scary. My view of apartment buildings, scary. I don't like them. I don't like commercial. And the reason why I don't like commercial is I've seen down markets. And in a down market, businesses close. If I have a rental property, a suited house or a residential, and my rent used to be $2,200 and I have $600 a month cash flow, I have $600 to move in order to rent it out, I can have it rented out in 30 days. 30 days gone,
yeah,
off the books, on break even.
Yeah, everyone needs a place to live.
With a commercial property, if I lose my tenant after 5 years or after 3 years, they break a lease, yeah, I'm going to sue them, but they're bankrupt, I'm not going to get anything. I could be vacant for years.
Yeah.
You drive around Edmonton, you drive around, I was driving around Vancouver. We were in Vancouver a couple weeks ago, and there's so many new buildings going up, all vacant in I don't remember the city. It wasn't in Vancouver. It's one of the cities in the Lower Mainland, but we're driving around all vacant. So then what happens is it's not new companies that are starting up that are taking these, it's existing companies that are taking them. So these existing companies will move from this place they've been renting for 10 or 15 years. They'll move out of it and take this new shiny thing, which leaves the old one vacant. So it's not like, they build 10,000 of these units or 1,000 of these units. There's not 1,000 new companies starting up. It's just a shifting of businesses that are absorbing them, which leaves all these older inventory for vacant. So commercial has some risk in itself. They're harder to sell. They're longer vacancies. However, when they're rented, better cash flow, more stability. The tenants take care of the problems because they're triple net. So there are risks for them. There's greater rewards for them, for sure, compared to residential real estate. I just find residential real estate, I can sell it quickly, I can rent it quickly, and I'm pretty much in control of all of my expenses and all of my cash flow if I play the game properly. That's why I like residential real estate. I just think that right now in this market, it's like buying a stock. You want to buy a stock when it's at the lowest point possible with the best upside. So that's why, people make the mistake, whereas they think they have to invest down the street. They don't. You go invest wherever the market is the best. And there's a couple things that determine the market. Obviously, the fundamentals, GDP, unemployment, whatever the market indicators are, the drivers, like in Alberta, it'd be oil and farming and government and stuff like that. Those are some of the key drivers in the Alberta market. But there's also things like the Landlord Tenant Act. I think people make a big mistake by not understanding the Landlord Tenant Act of other jurisdictions. They just sit there and say, I'm going to buy in BC, oh, the act sucks here. Or I'm going to buy in Ontario, oh, the act sucks here. Well, it does in those two areas for sure. But if people should be understanding the rules of the game before they go invest. So go research BC Tenant Act, go research Alberta Tenant Act, go research Saskatchewan, Manitoba, Ontario, Quebec, go research every Tenant Act and then decide where to buy. Because in BC, for example, and I'm pro Alberta. Once again, I live in Kelowna, I invest in Alberta. I can't see me ever leaving the Alberta market. And I have a place up at Big White, which we rent out, not Airbnb, but VRBO, which is fine. But right now, for example, my place at Big White, which I usually do $35,000-$40,000 a year of revenue, $0, not 1 cent, not one bloody penny has come in this year for my Big White property. But yet I'm paying $2,500 a month to float it.
Is that because no one wants
COVID?
It's COVID just killed it.
COVID.
See, that's interesting because I
COVID
got people,
killed 100% of my market up at Big White.
Yeah, that's crazy because I got people. There's nothing for sale at Silver Star, so I got people that are looking for something. Like there's nothing.
No, I could sell it like that. I could put it up on the market and sell it like that. But as a rental property, it's like I'm getting no revenue from it. So that's just an example of know your market, right? And how things can change and how the government can pull the rug from underneath you. And if you're not buying for cash flow, you're at risk of floating it. Now, when we bought Big White because I have this portfolio that's strong cash flow that can absorb those losses. Other people don't do that. Other people don't have 100+ properties. They have like 2 or 3 or 1. And if they're in a negative cash flow position like that, it'll cripple them. It'll cripple their lives.
Yeah.
And, so back to the Tenant Act in BC, the BC Tenant Act says you can only raise rent once a year, and it can be a maximum of 2% rent increase. But then a few months ago, the BC government comes out and says, oh, it's a rent freeze. No rent increases until at least the end of, is either 2021 or 2022. But so now they're doing a rent freeze. But what happens? Well, taxes are going up. Interest rates will go up. Cost of utilities are going up. Everything's going up and up and up, or everything's going up and up, but yet you can't raise your rent. So now if you're in a negative $200 cash position right now, you've just lost ground. You will never catch that ground.
Yeah.
So, whereas in Alberta, you can do a rent increase once a year, unlimited amount. So you can do a $500 rent increase to the exact same tenant. In BC and Ontario, there's land transfer tax. In Alberta, there's no land transfer tax. That land transfer tax in BC of say $15,000 or $10,000, whatever that number is, that's money out of your pocket. You can't put that onto the mortgage and finance it. So that eats up your first 10 years of cash flow, depending on what type of property you're buying. So people just have, I don't think anyone should be investing in their home city. I think people should be investing where there's the best opportunity.
Yeah.
And there will come a time where I think the Okanagan will be back in the game as far as cash flow. I just don't see it right now. I don't see how in the next 2 years that's going to happen. I think interest rates need to actually come up a little bit to slow down all these crazy offers to allow you to buy in.
Yeah.
So on the flip side, so now maybe you pay $50,000 or $80,000 more for that house in 3 years. However, you're now potentially going to be in a stronger cash flow position, which minimizes your risk, which allows you to play the game longer.
Right.
So it all depends on what your reasons for buying real estate are: cash flow or appreciation, and then mortgage pay down is the third one.
Cool. So we've touched on some of the things you're looking at when you're buying in, the 7 to 10% rule. The different strokes for different folks applies to the different markets across Canada. We did touch on it a bit. I want to maybe steer it here to wrap things up. Is where do you guys see things heading? Right. We touched on this. If you were to look in your crystal ball, Jared, you kind of said this is not going to last. Things are going to turn. What can people do? What should people be doing right now to prepare for that, to minimize risk in the next few years?
Well, I think this is a kind of a universal approach. Like, if you want to buy in the Okanagan, do it. You're going to get some great cash. You're going to get some great appreciation. It's a little speculative for sure. I just don't see a lot of key indicators that are going to support the drive, and especially once interest rates start going up, I think it could be risky for a lot of people. But it's like anything, if people buy real estate and think of it like an RSP or some kind of mutual, they're going to win. So even if you buy a house in the Okanagan and, oh, I don't know, interest rates might go up. Well, you can play the game differently, put more money down and think of it as an RSP versus this is a, oh my God, this house is draining me money. And because you're still getting mortgage pay down, you're still going to get appreciation. So if you're out $200-300 a month, which I really don't encourage anyone to be out of pocket. I will never promote negative cash flow at all, ever. But if you want to play the game in the Okanagan, play it differently. So expect negative cash flow right off the bat. And that's okay if you understand going in, but start topping up your mortgage, because in 5 years, when you go to refinance it, you're now insulating yourself in case of a high market or a higher interest rate. And a lot of it's going to be mindset, like change the mindset of investing in Ontario or in the Okanagan or in the Lower Mainland to a longer term play, and if the market spikes, start having exits, like points of exit. If the market goes up 15%, I'm going to sell this property and sell the property, because the mistake that people make is pigs get fat, but hogs get slaughtered. And as the market starts going, greed will take over. And I know I said 15. Oh, but the market, I want 25% return. And then it's at those points where you get greedy, where the market's going to tank and you're going to be left holding the bag and you're going to get slaughtered. So my point is if you're investing in these hotter markets where cash flow might not exist, play the game a little bit differently, where you set your target to exits, go on a variable rate mortgage so you can sell it easier with just 3 months interest, where if the market goes up here and you're here, it goes up here, I'm going to trigger the sale. I'm going to take my money off the table and do it again. Play the game differently. As far as where the market's going, man, I don't know. Like all honesty, like we were talking earlier, if we would have said a year ago that we'd be locked up and everyone would be agreeing to stay home for 12 months, I would have said that was foolish and there'd be pure riots in the streets. That's what I would have said. So now I don't know. Like, I think interest rates are going to stay low for the next couple of years. I think house prices, we're going to see some double-digit increases in house prices all over the country. I think unemployment rate in Alberta is going to drop the fastest in the whole entire country, just because we're seeing more rigs go out. We're seeing oil go up. Like they're pulling oil out of the ground now at $14-15 a barrel, and we're $65, $66 a barrel right now. If oil gets to $80-90 a barrel, which very likely it could, Alberta should be one of the hottest places in the country for cash flow appreciation, for all everything. Like I think right now, like I was talking to somebody the other day, and I've been investing since 2003, and I see this as the best opportunity in the market. And you just have to understand the different ways to play the game and apply those in that area. So Okanagan does work. It does work if you play the game this way. The Alberta does work if you play the game this way. And they don't work the same. What you're doing in Alberta isn't going to work in the Okanagan. What you're doing in the Okanagan isn't going to work in Alberta. So you really have to understand the different markets.
Cool.
Well, anything you want to add to that?
I think Jared kind of nailed it there.
Okay.
Okanagan wise, like I don't see it turning this year. Next year, it could turn. So the problem is the market's so tight. If something's got all the bells and whistles and move-in ready and it's got the nice floor and all the updates, it's gone day one. It may say 14 days on the market, but it's not, because it's conditions, if there is even conditions, right? So I'm seeing multiple offers on everything.
Yeah.
And so the only stuff that is available is the stuff that's ugly or maybe overpriced. And I'm seeing everything catch up. People are putting stuff on and the market's just catching up to it. So if someone's dead set on being here, a reno strategy, if someone could get in and get out quick. So if someone could buy something ugly, turn it around and have some experience that way would be good. But I wouldn't be banking on this to last more than a year or two personally. I love what you're saying about Alberta. I got roots there. It's every time we talk, I it makes me think I need to be keeping a lot. I need to know what's happening in that market more than I do. And we're here. So yeah, people can pick up the phone, they can call me anytime. Like I'm happy to share any of my resources. I know Jared is too. Jared's got a coaching program, and that's his bread and butter, in addition to buying residential property to hold. And so utilize us. We are here to help. And that's all I can say is, that's why we're doing this.
I'm gonna add one more thing. Like Okanagan, like it seems like it's unattainable or unsustainable. It's like I just can't get my head around it either.
Well, look at Vancouver though. It kind of makes me go, it could happen here.
So here, yeah, I totally agree. So here's some other things to think about. As the Alberta market starts picking up, let's just say the Alberta market picks up. Let's just, for shits and giggles, let's just say it picks up. That will also impact the Okanagan. If you were to go back to 2015, when I first moved to the Okanagan in 2015, I would fly back and forth to work. So I'd fly back to Alberta for work, and I'd work for a week, come home for a week, go back for a week. That was I did that for a good year and a half, maybe not a week at a time, but it was lots. And when I was on those flights, there were multiple flights a day to Calgary, Edmonton, Fort McMurray, Grand Prairie. There were direct flights from Kelowna directly into camps in Fort McMurray. Okay, direct into the camps, where now all that stuff's gone because there's just no activity, there's no work, there's no this, there's COVID, there's all these things have stopped all the flights. And so as the activity starts picking up, people are going to move to Edmonton. They don't necessarily want to live in Edmonton, but they'll go live somewhere because they're going to make $80 an hour working in the patch or whatever it is, and they're going to live in the Okanagan, and then they're going to fly back and forth. That was very, very big back in 2013, 14, 15, 16. So as the Alberta market picks up, it's going to continue to fuel potentially the Kelowna, the Okanagan market. Once the border opens up, all of a sudden you're going to have all these Americans come in because our dollar. They're going to have and the climate and the culture here in Canada, and it's the Okanagan. Like, let's be honest, everyone loves it. So right now we don't have any U.S. influence. We have no Alberta influence, and all we have is Vancouver people selling from the Lower Mainland and coming in here. So we only have one leg being fed, plus locals, but we only really have one leg being fed into the Okanagan. This is why the Okanagan has pretty much always thrived, except for 2008, 9, 10, and the global recession, because we have all of these feeders that come into the Okanagan that support it. Right now, we just really have one, and that's from the Lower Mainland. And then we see these interest rates where it's now almost cheaper to own than it is to rent. So we're seeing a lot of conversion of tenants into owners. But once Alberta starts going, the border starts opening, we're going to have another 2 funnels coming into the Okanagan potentially that could sustain it a little bit longer. But that's all speculative.
Yep.
Like if you're buying based on that is scary, unless you have some protection over here with other strong cash flowing something, stocks, houses, whatever it is, to be able to support this property over here that could be in a negative for a long time. So I'm not saying don't buy in the Okanagan. I think the Okanagan is a great market if you're structured properly to withhold it and to sustain it. If you're just purely buying for the Okanagan, hoping that it goes up, there is some risk there. And I think people need to understand and be careful.
Absolutely.
So we've I think you guys have done a great job of just giving us the overall, look and feel and temperature of the market currently, where it is, how it got here, and where it's potentially going, and then touching on the individual markets across the country. Jared, if people have more questions, because there's only so much we can get into in an hour. And obviously there's much more detail, and every specific situation has, new questions that arise. I know we touched on your coaching program. Maybe let people know what's really available if they're really looking to invest and, they feel like they need to work with someone one-on-one like you offer.
Well, there's 2 things. One, if you want to invest in Alberta, I have a company called Tilt Property Group. So it's www.tiltgroup.ca. Facebook and Instagram, it's Tilt Property or Tilt Group, sorry. So there's that leg, which is good, would help an investor get into real estate. We have a property management division, a renovation division. I got realtors, I got all that stuff. So it's like a one-stop shop for investments. For someone who wants to get educated or wants to build a real estate portfolio, we have our coaching business, which is jkcoaching.ca. On Instagram and Facebook, it's Jared and Krista. And that's more, like we've made a lot of mistakes, Chris and I. It's all one-on-one coaching. It's not group. We only work with 10 to 12 clients a year. And it is meant to fast track your success, your results in real estate. So we'll start with goal setting. We'll break down your current portfolio, your current asset and cash base. I'll tell you the path to go down. It takes me about 30 to 45 days to figure out the path you should be on. But I'll tell you to go down this path, and then and support it with these two paths. Maybe it's a buy and hold strategy with a flip strategy. Maybe it's in a joint venture strategy with a agreement for sale strategy. But the whole point is for you not to think. I'll do all the thinking for you, and it's like, go do this. Every week there's assignments. Every so the plan is after 9 months, it's a 9-month program. After 9 months, you're all set up for success in real estate without making a mistake. Those are the two businesses I got: Tilt Property Group, and then our coaching business, Jared and Krista, JK Coaching.
Awesome.
Excellent.
So thanks again for coming on, Jared. And I want to remind everybody that this is just one part of 3, right? The next 2 we have lined up. The next podcast is going to be really focused on, what do you do when you have these properties? Some of these things you just mentioned, we might get into it with how you manage people's portfolios and whatnot. And then the third one is we're going to get into the horror stories, right? So that should lead for a really entertaining talk with you. So everybody that's listening, stay tuned because there's more to come.